And we're on.
All
Let's
right.
do it. So, welcome to the weekend before the 4th of July. And I think we got a pretty good slide deck here for this one. And
Is it
it's
good?
I think it's pretty good. There's some interesting things happened in the market this week, and it's pretty good.
I want to see if anybody noticed we got new cameras so that we're a little clearer.
Right,
It'd be
right.
interesting if anybody
Yep,
actually notices.
I got the microphone closer. We're working on making the thing better.
Yeah, production quality hopefully gets
there we
better
go.
every week.
Yep. This is going to be recorded. I might be traveling tomorrow, not sure. Conan's out of town, so we are recording this, but I am pretty much 100% sure I will be in the chat tomorrow night, and if I'm not, I'll just get to the questions at some point tomorrow.
Yeah, this will be similar to last week where
Yep.
we have it recorded, but it's on Facebook. It kind of presents itself as a live kind of thing, and we're trying to keep that so that you guys have a chat box. Otherwise, we just post a video and then it's not the same.
It's not as interactive.
Yeah,
This is way better.
Yeah, this will always be Plan B. Plan A will be, having the live actually on Facebook.
Right.
All right.
Oh, and before we forget, in case I forget at the end, next weekend is the 4th of July.
Yes.
Is on Sunday is the 5th. So I'm not going to be here. I'm going to be in Massachusetts.
Jerry will be in Massachusetts. I will be in Annapolis playing Sailor Boy.
Yeah.
Even though I'm a soldier.
But I'm gonna zoom in, and we're gonna figure out a way to do it live. So it'll be interesting show.
Plan C.
Week. Yeah, Plan C.
All right. Let's get to it.
Let's get it on. Weekly update, 28 June 2020. So we're going back to a Warren Buffett quote again this week. Games are won by players who focus on the playing field, not by those whose eyes are glued on the scoreboard. So what does that mean for us? A couple things. It's all about the PIP, right? A PIP is a critically important snapshot.
So what's PIP again?
PIP, personal investment performance.
So that's sort of your scoreboard.
Yes,
Is
absolutely.
that where we're going with that?
That's where this is coming from, right? So the point here is Warren Buffett doesn't worry about. He's not looking at his bank account. He's looking at his stock portfolio and how the companies that he's invested in are doing, and all the research and everything behind it. But he's not looking at the game is the goal, really, not so much the result. Like, obviously everybody wants to make money, and that's the point. But he's focusing on the game, not on the scoreboard.
Right.
And for us, the scoreboard is the PIP. It's your personal investment performance.
And we get a lot of people asking us about your PIP.
Yes.
And we have discussed some ways that we might find a way to be able to put that in context, because that's what you have to do. We can easily, show your PIP, but that's not the whole picture.
It's not. There is a post up there somewhere. I think it's in Jerry's blog somewhere about the PIP and
your
personal
returns.
thing. My returns.
Yeah, it's actually pinned to the top of the Facebook page.
Oh, okay.
So it's easy to find.
Yeah, the PIP is important, but it's going to change a lot. I mean, for anybody who's been following, when we got out in February and didn't take any of those losses, at some point, your PIP, if you were following that, went through the roof.
Right.
But everybody else's PIP caught up if they stayed in and didn't get out because the market came all the way back. So, the PIP matters, but as Warren Buffett here says, this is not me saying it, focus on the game, not on the scoreboard.
Right.
Okay. So lots of volatility this week. Market was up Monday and Tuesday, only to give all those gains and then some back by the close on Friday. We're going to look at weekly charts and daily charts to kind of show that. The moving average lines are converging. We talked about that last week, and we're still kind of in the same question. Will there be support provided by the convergence of those moving average lines? And we'll take a look at that on the daily chart. And then if there is support, great, the market goes higher. If there's not support, where are the next resistance levels? We'll kind of play with that idea a little bit. And then how do we play this whole thing going forward? This is a pretty bearish look right now, actually, because The charts don't look great, but there is a bearish, there is or a bullish. There's a possibility that the thing goes higher, and I'm gonna kind of draw out that pattern of what that would look like if we do get support. Um, what it would look like if it went higher. So, okay. Here's the weekly view from last week. Okay. We talked about how we got support last week at the 10-week moving average right here. Right? The convergence there of the 10-week and the 50-week moving average. We got support. Wait a minute, what just happened there? Okay. This is what I wanted. All right. All right. First day with the new software. Last try. Hold on. There we go. All right. This was last week's chart. We got support there at the 10-week moving average, and then the market moved higher. So the lowest price for the week hit the 10-week moving average, but then it closed higher, right? That's why we have the tick is white. This week, we still got support there, but the problem is the week closed at the bottom. So I'm trying to do a few different things with the software here, so bear with me. Okay. So you can see right there where the arrow is, the last tick, which is this week, is red. It closed the day like right on the red moving average line, right? It's the 200 day. So it closed at the bottom of the weekly range, which is not a good thing, but it did close like right on that support level. So the answer is we have to give it another day to see what happens. But we're right on it. It's not as optimistic as last week's was, but for right now we're still in the game. I don't like the risk of it, but it hasn't broken those levels yet, so we're okay for right now. Okay. So in the daily chart, what could we have here? We got a potential double bottom, right? We did a gap down right here in early June. We got some support at the 200-day moving average right there. And then we came up and rolled over, and we're back down almost to the 200-day moving average. So it's possible that this gives us a bit of support, and with the convergence here between these two, we get support, and we go higher from here. Absolutely possible. It'll happen next week one way or the other. If we get a close below that 50-day moving average, I'm not going to be in the stock funds. If we get a close below that 50-day moving average, I'm getting out of stock.
And that's
funds
the red line.
Yeah, that's the red line.
And for those, and a lot of times I try to play the dumb guy because I am. I'll lose track sometimes here with Jerry. And if you go over to the left side of the chart, and you'll see the blue, red, green. It tells you what those are. The moving averages, 10-day, 50-day, 200-day. Yeah. So just in case you kind of get lost track with there, because it's not, the line isn't labeled that way. Well, sometimes Jerry does label it. But anyway, just trying to throw that out. But these are all converging there.
Right. So they're converging, and right now the price is pretty much right in the middle between the three converging moving average lines, right? So if it works as support, great. It'll go higher from here.
It'll bounce up. Yeah.
But if it breaks to the downside, that's it. It's game
so
over.
This is definitely one to watch.
Definitely. This week is going to be critical. And all three of the funds, the charts look almost the same.
Yeah, so do yourself a favor and, get on one of these sites, stockcharts.com is what we're using, and set this stuff up and be watching it, and you at least get a heads up that some change may be coming, right? Because if you see it drop there, we're moving out. You'll know that an alert's coming out if you're a member. So.
Right. At a minimum, I mean, you can look at this and say, okay, well, I don't want to deal with the charts this week or whatever, but you can look at all you have to know really right now is that a close below. Let's zoom this in one more time. A close below like 2950 or 2975 on the S&P 500. Anything down there in that range, I would absolutely be out. So if you just keep that number in mind as you're driving down up the highway for going to 4th of July, wherever you're going, and you hear on CNBC that the S&P's down 2% or whatever, and the number is 2950. If it's before noon, pull over and
make a change.
make a change.
Yeah.
Wouldn't be the first time I've done it, I can tell you that.
Yeah, or and of course, a little bit of a plug. If you're not a member, become a member. It's less than a cup of coffee, and
you'll get a text message that tells you to pull over.
Exactly. You don't even have to listen to the radio.
Right.
Keep listening to Sirius XM, your favorite station,
right.
And we'll send you a text message and an email that says "Move your money."
Yep.
So,
all right. Okay, so that's the C Fund Daily. S Fund, even more interesting actually because we've been talking about the channel. We are absolutely. I mean, we broke the channel line. Technically, the channel is broken, but it's right on it. So I'm going to give it another day. If we close below, let's see. If we were to close below 1350, I'd definitely be out of the S Fund. I mean, you can see the channel has been in place since the end of March, and if it doesn't mean the market's going to roll over because it broke the lower channel line. It just means that the trend has changed, and the market risk is super high. So it will be great if it finds support there and gets back above it, and we just don't know yet. So I'm a little bit pessimistic, but I'm not moving my money yet either. So I'm waiting. The technical indicators aren't good, right? They topped out there at the last high, and it's been rolling over. The momentum indicators don't look good. So something to keep your eye on. Something to definitely watch within the first couple days of next week. iFund is basically in the same boat. All three of these funds gapped down in early June, came to a low, came back up, got above the 10-day moving average, and then rolled back over. And now they're doing the best they can to try to stay above that 10-day moving average, but it's not looking really good. The possible move upward, we talked about it a little bit on the daily C Fund, and you can kind of see it here also on the I Fund. We had the gap down to this low, right? Right now, where the price is, it's not below that prior low. So if it doesn't go any lower, we can do basically a triangle. So it's entirely possible that we get support here at the 10-day moving average and we go higher. Right? This would then be a triangular consolidation in hindsight, and we would have moved higher. And it's entirely possible. It's just that when you take the seasonality into effect, into the equation, and the indicators are trending down, and you get down here, you get the volume on the down days, the red days, the volume is higher than it is on the black or up days. That's not a good sign. So until it happens, you don't know. But taking everything into consideration, I'm not super optimistic. But that is the bullish possibility. So we'll see how it plays out. Last thing, I just kind of mentioned it, seasonality. I put this chart up a month or two ago, and we were talking about the idea of sell in May and go away and come back after Labor Day. So June, this is the S&P 500 C Fund average returns month by month. So June, you can see on average has basically a zero return. So we're done with June, and this is no ordinary year given, but if you want to take seasonality into account, July tends to be up a little bit, about 0.25%, but August and September historically are bad. So we're coming into a very rough season of the year, and I'm not super optimistic, and that's not even touching on COVID and
Election.
elections and all the stuff that's going on in the world right now. I mean, uh,
Well, so do we have charts that would show us, that'd be interesting to look at. Maybe we'll do that the next show. If you have time to pull it up, Jerry, like go back and get a snapshot for each year that's a big election year,
sure.
right? And see if November looked different. My gut tells me, I don't know. It's going to be interesting to see that it doesn't really care, right? Most of the time the market doesn't care. But it would be interesting to see the data to see, because we know we're rolling into an election time frame. This is a very interesting year, to say the least.
To say the least.
What would be, to me, interesting from this perspective is when we get to January to look back and go, but was it really any different than every other year, right? And see if all these major things that have happened through this year really impact the market the way we think they did. Right.
It's interesting because I think I got one last thing here on. I'll just put it on the notes for me to talk about on the questions. But that kind of goes to the things that sort of keep me up at night. For right now, both of them are COVID related, right? And so the first thing is, I know I'm looking up. I gotta look at my notes. All right. The first thing is, at the end of July, the stimulus checks come to an end. So if you are getting the $600 addition to the state's unemployment,
right,
that $600 right now, as of now, goes away at the end of July.
Mm-hmm.
That is the thing that's been keeping the economy going while we, on purpose, turn the economy off so that everybody could stay home for COVID.
And I mean, we know people personally, I know I do, that have told me that all things considered, with that extra money,
Yep.
A lot of these folks that I know have never been on unemployment. Yep. So they were forced to. They had decent jobs, but they stopped. The job stopped. They went on unemployment. But once you added that $600 a month, and I think this is some of the reasons why we don't keep that high. Takes away some incentive to go get a job because they were making just as much money, or close, not just as much money a lot of times, but enough that they weren't going to, and that's what it was for, right? So that's okay. But to that point is it has to end sometime. We can't fund that forever, and but that kept things alive.
It did.
That was the whole point.
That's why the market didn't crash. So when we say
people kept going to restaurants for takeout if they could, people could keep some of the industry alive that definitely would have failed.
Right. Absolutely. And it would have failed. And you're right. It can't continue forever. And so right now it's scheduled to end at the end of July, which kind of goes into the second point here. Even as almost every state is entering phase 3 of reopening, you got California, Louisiana,
I think it's
Texas,
that are going
Florida,
backwards.
Yeah, Florida and Texas are the big ones. But yeah, they're going backwards. I mean, they came out this weekend and people, new rules, can't go to the bars, big spikes in coronavirus. So even as most states are opening back up, if we, and I actually heard it on my way over to your house here this afternoon. It was the first time I actually heard on CNN they were interviewing a doctor in Massachusetts that was actually calling for a renewed, complete economic shutdown like we did in March.
Wow.
It's the first time I've actually heard somebody go to that extreme out loud, but her opinion was that the spike right now is so bad that we absolutely need to go back to a full lockdown. And if we do that, that's fine. But the response to that is what will drive the market going forward.
Yeah, or not. I mean, so I think that's what's going to be interesting is the only word I can think of.
Yeah.
Not fun, not whatever, but like interesting to look back in January or February or whenever we can, look back at this year and go, how much did it really impact? Like really, really impact? Because right now we think it is. And once we have the data to go look back at, it's going to be really interesting to say, okay, with all of the things that happened, how much did the market really change from historically, from what it's looked like before, and how it looked like in 2020.
Right.
Because,
Interesting.
and why this is very different from the reason why it tanked in 2008.
2008.
Yeah.
Sure.
Very different.
Yes.
That was banking related.
Right.
Right. This is not banking related. It's consumer, the mechanism where consumers go out and spend money in the industries.
Right.
Right.
We turn the economy off. On
Yeah, and
purpose.
it's really different. So,
The thing, well, I'll have to remember to do this. I'll have to write that down. But the thing that the way we'll see it, and people can talk about, did this cause that or whatever. It really doesn't matter. All that
No.
matters is the chart, right? So what will be interesting will be how this year looks with respect to the long-term chart. So
Right.
if you look at a 25-year chart or
How
50,
different is this
100-year
year?
chart, yeah, how does it and either the Fibonacci's or the Elliott wave count, how did this year affect the long-term Elliott wave count? There are a lot of guys thinking about that, and maybe we can.
A lot of people in the
next week.
financial world, you're saying.
Oh yeah, which is a very
Yeah.
few number of people.
Yeah. But interesting enough is that, this is the good part is you folks out there watching this are way ahead.
Yeah.
Because as crazy as it may seem, what we're doing here is considered a disruptor in the financial industry. Most people do not want to follow this line of what we're doing, which is just taking all of the emotion, taking all of the, all of the fluff out of this and just looking at the numbers, looking at the data, looking at the charts. And what does the chart tell me? And the chart tells me that it's going against, what we know is a barrier or support, and if that's happening, and at the end of the day, what Jerry is focusing on, and we're going to keep pounding this mostly because we have a lot of new people that watch this each week. The focus is don't lose money.
Number one rule: don't lose money.
Don't lose money. Rule number 2, 3, 4, and 5 is basically, be in the market when it's up, be out of the market when it's going down.
That's it.
That sounds like it's simple, and it's not timing the market. It's just looking at the market.
Managing risk.
Yeah,
That's all
managing
we're doing
risk.
is
So,
managing risk.
so we're going to be out if this happens, and I will bet anything I can bet that we'll be out because we have in 2008, we were in 2020, we were out.
We're already 70% out. So
You're right.
So we're
Yeah.
and if you look at the chart, we got out like the day before the top of the June top. So
Right.
yeah, I mean I'm pretty happy with where we are. Yes, we were 30% at risk on this on the amount that we have come down since that high in June.
Mm-hmm.
But I'm okay with that because I know that as soon as it breaks that 50-day moving average, I'm not going to be at risk at all anymore.
Right. Yeah.
I'm going to be out.
All right.
So, all right.
Any questions? Put them in the comments. In the chat. This is going to be presented like a live. I mean, we're at the end of it by now, so you guys will have figured it out. But the point is if you have a question, we didn't cover something, please put it in the comments. You can always email us. The comments are actually better because Facebook tells us that you put a comment in there, and we can get around to it. So. We really appreciate everybody tuning in every week. We're going to do everything we can to have these every week. Next week there'll be some travel, so we'll be kind of using Zoom and some different things. Hopefully it'll all work.
Yeah, we'll pull it together.
Yeah, we'll make it happen one way or the other. Even if we have to record it and put it up, we'll do like we did in previous times. But hope you guys are having a great weekend. Be watching next week because this is going to be an interesting week.
Yep, it's going to matter a lot.
All right.
Have a great week.
Take care, guys. Be safe.